afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be taking a look at three charts. We have Target, Incyte, and ServiceNow on the list. But first, let's take a look at those major indexes. It's Alyssa Corum here, and today I'm joined by Justin Nielsen. And Justin, we did finish lower across the board. The Nasdaq down about 0.6%. The S&P 500 and Dow down about 0.4% each. But off of their intraday lows, stocks moving today on trade-related headlines. We had a Reuters headline saying that the phase one trade deal may not happen by the end of the year. But again, we did finish off of those intraday lows.
Yeah, considerably. We have the two deadly words together, China and trade, and that kind of knocked things down a little bit. But as you can see on this chart, the 10-day moving average, that's something that we've been talking a little bit about as an area where we have been moving up since October above that level, and we touched it and just got support right there. So that's a good thing. And also 8,500, that level we've been talking about a lot recently, it's still holding for the Nasdaq, and a lot of the other indexes are also kind of showing that level of support. So while this was kind of an ugly day at its worst, it wasn't really hurting things too bad in terms of the overall indexes. And with growth stocks, you had a lot of stocks that held in there very well.
Yeah, that's right. And we do want to take a look at some individual movers today. Target, among those, moving big on its quarterly earnings report. A nice gap up today. The stock gaining over 14%. Really heavy volume here today, Justin. And it looks like this is the third or fourth even gap up in a row for the stock on earnings.
Basically, that seems like the pattern that Target is kind of hitting right now. And you remember they have the big bullseye as their logo, and they're just really hitting the mark. And they've got their digital, at least at the Target by us, they have curbside service, which I hope that we never have to use because, well, it could be a good thing because I feel like we don't actually get it.
If you have to go in, then there's no telling
then
what
it's $200.
The family will pick
it doesn't
up.
matter. It doesn't matter what we're buying. It's going to be $200 by the time we get out. I mean, my son and his monster trucks. He's 5 years old, and so we can't get out of there without monster trucks. But they beat EPS rose 25%, beat estimates considerably. The estimates were for 8%. They beat on sales, and their same-store sales were also above. And so this gapped way up, almost up 15%, maybe 15%. So what it's been doing in the past is it's kind of gapped up. It's kind of edged up a little bit, and then once the next earnings report comes up, it gaps up again. So you might see a little bit more out of this. And keep in mind, this is a dividend-paying stock. It has about a 2.4% dividend yield, which is much better than the S&P 500 offers at 1.8.
That's a really good point, Justin. And as you were alluding to, our research shows that these powerful moves higher are often a precursor to even further gains.
Right.
So you definitely want to be paying attention to this, and also very positive seeing the stock close almost at the very top of its range for the day. So a really strong move.
Yeah, and it can be scary when you see at the open that it gapped up like so much, and you might say, oh, I missed it. But sometimes you can still buy it at a close to that opening price and still get quite a bit of appreciation later on in the day.
That's right. I think Dexcom is a really great recent example of that. Go look up that chart after the show. And now let's move on. Let's take a look at INCY, Incyte. It tried to clear prior resistance today, still managed to gain over 1% in above average volume today, Justin. But it's been able to really continue its run after issuing its quarterly earnings report in late October.
Yeah, and now it's kind of cleared that 86.40 area. It's hovering right there, so this is still viable, potentially. And the medical biotechs, the whole medical sector has been having a lot of, you mentioned Dexcom earlier, there's been a lot of stocks in this sector. And again, despite the trade, the China trade news, this still closed up considerably for the day, and it was the IBD stock of the day. So I'm not going to go into all of the things that this stock has going for it, but it is a profitable biotech, 100% gain in its EPS the last quarter. But Allison Gatlin wrote a really nice article on this because it was the IBD stock of the day, talking about how it's got an expanding pipeline. They've got like 16 mid-stage and 12 early stage. So they've got a lot of things going and a lot of cash for a potential acquisition. So
yeah, that's right. Make sure you go check out that article, and this is definitely a good one for the watch list. And last but not least, let's check in on ServiceNow. We did mention recently that the software sector is picking back up, and with that, ServiceNow is now hitting its highest level in quite a few months here, tacking on a gain of about 1.9% today. Massive volume behind the move too.
Yeah. So yesterday it joined the S&P 500, and so that of course is a lot of mutual funds and index funds are kind of saying, okay, well we got
the radar.
Yeah, we got to put this in to match the index. And as Ed mentioned yesterday, and you and Ed talked about the software sector. I mean, it was looking very ugly. It had a very phenomenal start to the year. It was looking pretty ugly earlier. But a lot of the stocks are coming back. A lot of those former leaders are coming back. Now, if you look at the chart on this one, you don't have to wait for that 303 prior high in this case. You have an early potential entry because it cleared that 276 area. A couple ways you could look at this. It hit that 276 area a number of times. You can see that kind of hitting. This is a weekly chart here.
I'm sorry,
this is a daily. This is a daily. We were kind of switching back and forth.
Exactly.
I should have let people know what we were doing, but we kind of hit that 276 area
in late August. We saw it again in late September,
right
and
where the 50-day moving average
mid-October.
line, was
There's
as
the
well.
weekly.
Yeah, so it cleared that area very strongly. And another thing you could do is we have this shakeout +3 rule. Now, Mike Webster talked about this in the IBD Live this morning. And basically at 243, it undercut that area. And so if you shake out and then come back, that can also give you an early entry. Now, this is a high price stock, so instead of adding 3, we might say add 25 because it's a $250 stock. So adding that gets you right around 275, 276 area, and you're right in that same area with a shakeout +3 early entry.
That's right, and this is obviously a very abbreviated explanation of that. Yes. So make sure you are taking advantage of the free trial of IBD Live so you can get all into the nitty gritty and get your specific answers on that and more, your questions answered.
Yeah, and a lot of times Mike Webster is throwing out precedents too, like, okay, this is, remember Cisco back in 1990 in November, when it came out with its IPO and went up 75,000%
wow.
in 10 years. So.
Well, that's exciting. So make sure you check that out at investors.com/IBD Live again for your 2-week free trial. And before we go, we do want to keep mentioning the Canceling Masters program because it's our last one and it's going to be the biggest and best one ever coming up on the weekend of December 14th and 15th out here in LA. And you can learn more by going to investors.com/masters. And you can also learn more right now from Justin about it. Just give us a little.
Oh, okay. I'm like, what am I doing?
I'm putting him on this. Him on the spot.
We've been doing this for over a decade, and this is where you really get access to the top experts, and not only the experts, but one of the things that we keep on stressing is that you get access to some of the top traders in the audience. The attendees are really a high caliber of attendee that really know their stuff. They've been doing this for a long time, and just kind of building that network, sharing ideas, it makes it well worth it.
Yes, it does. Okay, and once again, go to investors.com/masters for all the details on that. Okay, everyone, thank you so much for joining us today, and make sure you come right back here, same time, same place tomorrow. We'll see you then.